Hi guys, this is David, the Spread Doctor, and this is my journal for Monday, the 5th of October. And as you can see from the heat map today, there is simply no ambiguity about the direction of the equity markets. All the equity indices were up by more than 1.5%, and the Nasdaq and Russell managed to close up more than 2%. All the sectors in the S&P 500 closed in the green, and even crude oil managed to catch a bid. Crude was up by about 6%, just over 6%. And the interesting thing about days like today is that you get people, particularly retail investors, asking questions about why the market went up. Why did the market go up when unemployment is still high, jobs created lower than what the street was expecting on Friday, companies are laying people off, the rate of infection is increasing? Why are the markets going up? And I can understand the premise for the question, in the sense that if one can explain why the market went up today, then perhaps one would be able to deduce whether the market will continue to go up or if it will reverse and go down. And I came across an article from about 2 weeks ago, and the headline from that article encapsulates the market environment we're currently in. And the headline is a quote from a Wall Street veteran known as Art. He works on the floor of the New York Stock Exchange, and although this quote was from 2 weeks ago, and I think it was on a day when the markets were selling off, it is still very applicable to today's rally. And he simply says, stop looking for logic in a market trading on momentum. And that makes total sense to me, but depending on which pundit you listen to, today's rally could be attributed to Trump being discharged and returning to the White House. There would be others who would attribute it to rising expectations of stimulus from Washington, and some might even attribute it to Biden winning the next election. The bottom line is that fundamentals of the companies in terms of their earnings for the next quarter is not driving these markets. So these markets are not trading on the expected earnings for next quarter. The markets are trading on momentum, and that momentum in part is created by a lot of liquidity from the Fed, from the stimulus, and from other quarters. And with so much liquidity, there is a lot of money on the sidelines looking for a home. And one of the biggest homes in terms of investment is the US Treasury. The problem is the US Treasury is paying less than 1% for a 10-year bond. Can you imagine investing your money for 10 years and at the end of it getting less than 1%? So much money remains on the sidelines waiting to be deployed into equities and into other asset classes. So the market is driven by momentum, and it is susceptible to headline whiplashes. So occasionally, whatever the headline is on the day could just swing it. It doesn't mean that is what is driving the market. The market is just simply trading on momentum. And that takes me onto the VIX. So as the markets rallied today, there was also some downside protection buying going on. Not enough of it to tip the scale, but enough to push the VIX higher. And the VIX was up by about 1% to close at 27.96. And there are now 11 days until the October contract expires. It's going to expire next week, Friday. And there are 46 days until the November contract expires. And that means that my window of opportunity to sell spreads in the November contract will open up tomorrow. And that said, I had no new trade ideas for today. However, I still have one open position in October and one synthetic position. So my October position is in PDD. Let's see what PDD did today. So PDD was up by 67 cents today, or about 1%. My short 75 put is still in the money, and the plan I laid out on Friday in the Friday journal has not changed. My second position would be Facebook, 275, 270 put spread. Let's see where Facebook closed today. Facebook was also up about $4.71, which comes in about 1.8%. So the 275 put is still in the money, and the plan I outlined in Friday's journal still holds as well. And that takes me onto my watch list. I've only got two items on my watch list today, UNG and Zoom. I'll just quickly see what they're doing. UNG, the natural gas ETF, and the implied volatility on this is 81.5. That's why I made it onto my list. And the other one is Zoom. IV on Zoom is 60%. And that brings me to the end of my journal for today. The takeaway from today's journal is that my window for selling November spreads opens tomorrow, and I shall start looking for spreads to sell. I hope you've enjoyed listening to my journal, and if you have any questions, simply post them below. Goodbye.